So let's talk about Bitcoin. You know, it was created to be this amazing escape, a whole new world away from the traditional financial system. But what happens when that very system, when Wall Street itself, decides it wants a piece of the action? This is the story of how the old guard, the giants of high finance, might be the ones pulling the strings on Bitcoin's price now. It all kicks off with the really strange mystery. For months, if you were a crypto trader, you were probably tearing your hair out over this weird, unnerving pattern. Every single day the markets were open, like clockwork, something just odd would happen to the price of Bitcoin. And look, this wasn't just a random dip. We're talking about a consistent, predictable 2 to 3% price crash right at 10 a.m. Eastern, the exact moment the US stock market opens. It got so reliable that people had to start asking, is this just a crazy coincidence? Or is there something much, much bigger going on here? Well, the answer, according to a whole lot of people watching this space, points to one single, incredibly powerful, and super secretive player, a company most of us have never, ever heard of. So, who is this mystery player in the shadows? Their name is Jane Street. And while you might not know them, they are one of the biggest forces in the entire financial world. And they really, really like to keep a low profile. But their influence, it's absolutely undeniable. Just to give you a little perspective on their scale, it's estimated that Jane Street is behind more than 10% of every single stock trade that happens in the United States. Think about that for a second. More than 1 out of every 10 trades. And their success, it is staggering. I mean, last year, Jane Street's trading revenue was actually bigger than legendary names like Goldman Sachs, Citigroup, and Bank of America. It's just wild. And boy, are they profitable. They've only got about 3,000 employees, but the average salary at Jane Street is a jaw-dropping $1.4 million a year. That kind of profitability comes from how they're set up. See, Jane Street isn't your typical bank or hedge fund. They're what's called a quantitative trading firm, or a quant firm for short. And this is super important because unlike those other guys, they have way fewer rules about telling the public what they're doing, what they're buying, what they're selling, or what they're betting against. And that secrecy, that's a huge part of their power. And that power just got a massive upgrade thanks to their new role in the crypto world. You could say they were basically granted superpowers through a very special designation. Okay, so when BlackRock, the world's biggest asset manager, launched its Bitcoin ETF, they needed a few key players to handle the complicated stuff behind the scenes. And guess who they picked? Jane Street was chosen as one of only 4 authorized participants, or APs. And this role, it gives them privileges that basically no one else gets. To really get how this works, let's use a simple analogy. Just imagine an ETF is like a ticket for, say, a super rare Pikachu card that's locked away in a vault. An AP, like Jane Street, is one of the only companies on the planet that has the keys to that vault. They can literally create new tickets out of thin air or destroy old ones, all to make sure the price of the tickets stays in line with the price of the actual card. And this is where it gets really murky. Public filings might show that Jane Street owns hundreds of millions of dollars in Bitcoin ETF shares, our Pikachu tickets. And you'd see that and think, wow, they must really believe in Bitcoin. But here's the catch. As an AP, they don't have to tell anyone if they've also placed enormous hidden bets, things like options or futures, that the price of Bitcoin is about to tank. They can look bullish in public while secretly betting on a crash. So this very unique position is right at the heart of all these allegations. A lot of people are claiming that Jane Street used these special powers to run a highly profitable and, possibly manipulative trading strategy. Okay, so here's how the alleged playbook worked. Step 1. They go out and buy a bunch of actual Bitcoin on the open market. Step 2, they secretly open these giant short positions, which are just bets that the price is going to go down. Step 3, right at 10 a.m., when trading is kind of thin, they use their algorithms to dump a ton of Bitcoin onto the market all at once, which causes panic and forces other people to sell. Step 4, the price crashes. Now, yeah, they lose a tiny bit on the Bitcoin they sold, but step 5, they make an absolutely massive profit on those short positions they opened. And then, the final move, step 6, they use those profits to buy back even more Bitcoin at the new, cheaper price and get ready to do it all over again. Now look, this is all just a theory, right? But this is where the story gets really, really compelling. On February 23rd, a huge lawsuit against Jane Street goes public. The very next day, that weird 10 a.m. price drop that had been happening for months, it just stopped. Gone. Completely. And in the 48 hours that followed, Bitcoin's price shot up 10%. What a truly incredible coincidence, right? Now, to be fair, not everyone is buying the manipulation story. Some analysts argue that this is just a sophisticated, quote, delta neutral trading strategy. In simple terms, that's a legit way to trade that's designed to make money no matter which way the price moves, just by perfectly balancing your buys and sells. It's a complex but perfectly reasonable explanation. But here's the thing. If this was just one isolated incident, you might be able to chalk it up to a complex strategy. The problem for Jane Street is this is just one in a whole string of similar allegations from all over the world. I mean, just take a look at this. In India, they were actually found guilty of running a morning pump, afternoon dump scheme and got banned from trading. In China, they faced accusations of manipulating silver prices using ETFs. And that lawsuit that went public, it accuses them of using insider information to profit from the $40 billion collapse of Terra/Luna. You start connecting the dots, and a pretty disturbing pattern starts to emerge. And the story just keeps getting wilder. The Department of Justice verified that one of Jane Street's co-founders literally wired $7 million to help fund a coup attempt in South Sudan. And yep, that's not all. A former Jane Street trader you might have heard of, Sam Bankman-Fried, went on to create the now infamous crypto exchange, FTX. So after all that, what's the real takeaway here? Well, this story isn't just about one shadowy firm. It's about what happens when an asset that was designed to get away from the system gets completely swallowed by it. Here's the most crucial point. Whether Jane Street is guilty or not almost doesn't matter. The financial system itself, the one that gives special privileges to middlemen like these authorized participants, is what creates the potential for this stuff to happen. Bitcoin has entered their world, and now it has to play by their rules and deal with their risks. And this really leaves investors with a fundamental choice. You can buy a Bitcoin ETF, which means you're trusting that system and all its middlemen. You own a share, really. It's an IOU. Or you can hold your own Bitcoin, what we call self-custody, which means you're trusting yourself. You own the actual asset, and no one can take it from you or force you to sell. It all boils down to one of the oldest and most important sayings in the entire crypto space. It's a simple little reminder that if you don't have direct control, you don't have true ownership. And that brings us to the final critical question we have to ask ourselves. The whole point of Bitcoin was to build an alternative to the financial system. So what does it mean for Bitcoin's future now that the system seems to have swallowed it whole?